Hi, I'm Rich Frankel, author of OneWorldEconomics.com. That's 360 pages long, so I'm presenting my key findings in a series of short YouTube posts. This slide deck looks at U.S. spending and taxes. Government expenditures take two forms. Governments spend and transfer money. If you buy a new car, you spend money. That is called consumption. If you give money to your brother, you transfer money. The federal government mostly transfers money. Programs that transfer money include Social Security, Medicare, and Medicaid. That money is not consumed by the government, it is consumed by the people who receive it or benefit from it. State and local governments spend more money than the federal government. They buy things like roads, schools, and police. By far the largest federal government consumption is for the military. This chart shows federal, state, and local expenditures, both transfers and consumption. The federal government mostly transfers money through programs like Social Security and Medicare. It also transfers about 1.1 trillion to states and localities in 2023. These are the hatched areas here. That's the federal transfers to the states and locals. About half of that is for Medicare. State and local governments actually consume about twice as much as the federal government. Federal consumption is chiefly for the military. Total government consumption at all levels is about 13% of GDP. That does not include transfers. That is just what the actual consumption of government spending is. This chart shows consumption as a percent of GDP, which is total US output. Federal government consumption, which is the orange and the red, has fallen as a percent of GDP. But transfer payments, this area down here, have increased. Transfer payments are not government spending, they're included in personal consumption. As you can see, there is very little federal spending that could be cut, especially if you exclude defense. And the national debt has also increased. This chart shows consumption and transfers for federal, state, and local governments. Welfare includes food stamps, unemployment benefits, workers' compensation, housing, cash welfare, and earned income credit. Education and other are mostly local spending. Other includes roads and police, for example. Healthcare is mostly Medicare and Medicaid, and pensions is mostly Social Security. Most federal spending is mandated by laws passed by Congress, such as the Social Security Act and Medicare. Until Congress changes these formulas, these items, mostly transfers, are automatic. They're called mandatory spending. The national debt payments are also mandatory. Mandated transfers include entitlements like Social Security, which is the largest item in the federal budget, and Medicare, which is the second largest item in the federal budget. Aside from defense, the blue area here, very little is spent on anything else. So you can see veterans benefits has some discretionary spending, and then pretty much everything else, international affairs, justice, and so on, that the government spends, very little of that that's a very small part of GDP total. Income security, by the way, includes Social Security, disability insurance, unemployment insurance, and Section 8 housing assistance and other transfer programs. Total federal government consumption in 2023 was 1.32 trillion, or about 5% of GDP. Of that, most was for defense spending, leaving less than 2% of GDP for everything else. Transfers were by far the largest part of federal outlays. So you can see here, these are all transfers. This includes Medicaid, Medicare, income security, which is again Social Security, supplemental income, unemployment insurance, and so on. So actual government spending outside of the transfers includes this purple area and this green area and the blue area for defense. So if you don't include defense, the green area is energy, transportation, natural resources, environment, commerce, and housing. And the purple area is everything else, which includes foreign aid, justice, treasury, agricultural space, etc. So trying to cut the federal budget on the basis of the purple and green is a fool's errand. There's just nothing much there to cut, and these things have declined as a percent of the federal budget and as a percent of the gross national product of the United States. Federal outlays rose above 20% of GDP in 1980 under Ronald Reagan and have stayed at that level except during emergencies. Personal and corporate tax receipts have declined to roughly 10% of GDP. So they went from 15% of GDP down to about 10% of GDP. The national debt, which is the difference between taxes and contributions for the social programs, has increased. So roughly 1/3 of the federal budget now is borrowed. That's the red area here. The national debt is now around $260,000 per household. So we've been living on the credit card. Federal revenue comes from three main types of tax. Now, the payroll taxes are taken out of paychecks for Social Security and Medicare. Currently, these are 15.3% of wages. There is a cap on Social Security taxes, but no lower limit, so this tax falls mostly on the poor and middle class. There is no cap on Medicare tax of 2.9% on wages. So the cap on Social Security means that at the maximum, somebody with an income of, let's say, $200,000 pays $26,000 in Social Security taxes, but the same $26,000 is paid by somebody with $20 million in income. Personal income taxes are taxes on wages, dividends, capital gains, and business income. The marginal tax on wage income varies. Everyone pays the same rate on income below each of 7 levels. So you pay the same tax on $100,000 of income above deductions as somebody who makes $10 million a year. But the marginal rates go up for each increment of income. So above 700,000, the marginal rate is 37%. Capital gains are taxed at 20% max, regardless of how much capital gain you make. Dividends, since the Trump Tax Cut and Jobs Act during his first administration, are now taxed at 20%. Okay? So as you can see, wage income, at least at the higher end, is taxed much higher than unearned income such as capital gains and dividends. Corporate income taxes raised about 10% of federal revenue in 2023. Everything else, such as the estate tax, which brings in less than 1%, and tariffs, which brought in 2.1% in 2023, bring in very little. But if tariffs are increased, of course, this will bring in a lot more money for the federal government. But that money will come from people who buy things. So it tends to be a regressive tax. The earned income tax credit is a negative income tax of up to $1,600 annually for families with low earned income. It is the major anti-poverty transfer program in the United States. The earned income tax credit was enacted under Ford in the 1970s and expanded under Reagan. Income tax receipts are reduced by tax provisions, sometimes called spending through the tax code, and by clever tax accountants using loopholes in the tax code to find ways to shelter income. So the tax code runs to around 7,000 pages. It includes many provisions that reduce taxes. These include the mortgage interest deduction, child tax credit, IRAs, lower capital gains and dividend rates, oil and gas tax preferences, and renewable energy tax credits. Many very rich people pay little or no income tax. If all income were taxed at the same way, annual tax collections could be about $2 trillion higher, more than enough to cover the budget deficit. But some caveats apply, which I'll get to in a moment. Corporations and individuals use legal tax avoidance to park money in tax shelter countries. Estimates run to around 370 billion tax avoided annually for just corporations. Illegal tax evasion estimates are on the order of 500 billion annually. The defense budget is around 800 billion by comparison. So what would happen if we taxed all income at the same way? While some tax expenditures are clearly wasteful, some, such as the earned income tax credit, are the backbone of the fairly minimal anti-poverty effort. Also, as tax expenditures are removed, individuals and corporations will change their tax strategies to try to minimize the impact. So removing tax breaks should be undertaken during a massive reform of the tax code if you want to talk about draining the swamp. Income schmincome. It is important to note that for wealthy people, income for tax purposes can be quite different from what we would think of as income. Trump, for example, paid $750 in income taxes in 2016 and 2017. Unrealized capital gains aren't included in income. Jeff Bezos took a salary of $81,840 from Amazon in 2018. Meanwhile, his stock grew $27 billion in worth, none of it included in income or taxed. And by the way, he could buy his super yacht by simply taking a loan out on his $27 billion, at a few percent, instead of paying taxes on cashing the stock and then paying taxes on that. And if he did pay taxes on that, that would be the 20% capital gains rate. Real estate is often used to avoid taxes. Trump, quote, lost over $1 billion between 1985 and 1999 and was able to carry forward that loss over 18 years, paying no income tax in many years. Not only was he able to declare a $1 billion loss, but apparently most of that money wasn't even his. Corporations are also able to avoid declaring income for tax purposes. Between 2018 and 2020, Archer Daniels Midland, Edison International, FedEx, Principal Financial, Salesforce.com, and T-Mobile had no net income and paid no income taxes. So, the declared income tax rates on the wealthy really doesn't reflect all of their income. The budget deficit is 1/3 of the federal budget. So as you can see here in 2023, outlays were 6.1 trillion, which includes the mandatory spending like the transfer programs we've been talking about, Social Security and Medicaid and so on. And there's a smaller discretionary spending. And the rest was borrowed because we got only 4.4 trillion in revenues. So that included income taxes, which was roughly 50% of revenues, the payroll taxes, which, as you can see, nowhere near covers the mandatory spending, corporate taxes, which are really small, and so we had to borrow $1.7 trillion. And as I mentioned, that amounts to about, the total accumulated national debt amounts to about $260,000 per household. Transfers support lower income households. So this shows average incomes before transfers and taxes from 1979 to 2021, and after tax incomes. So as you can see, the highest quintile has gone up a lot, from roughly $162,000 in 1979 to $418,000. And this is in constant dollars. This is corrected for inflation. So $418,000 in 2021. Middle income workers have gone up 44%. So from $63,000 roughly to about $90,000. And low income workers in the bottom quintile, so households in the lowest quintile, have gone up from about 17,000 to about 22,000. But after taxes and transfers, everybody's gone up more. So that's because the tax rates have been reduced. So the highest quintile went up 167% during this time period from 1979 to 2021. whereas they went up only 157% before taxes, and that's because taxes were reduced. The same thing for the middle class. The middle class has gone up more after taxes and transfers, and the poor have, or the lowest quintile has benefited mightily from things like the earned income tax credit. So they've gone up 131% instead of just 32%. So they're being literally, supported by the earned income tax credit and other transfers. So, as we've just said, transfers are very important for low income households. Tax cuts have goosed after tax growth for all quintiles, but that's come at a cost. The national debt is now $273,600 per household. Reducing the federal deficit. Personal and corporate income tax collection is now down about 5% of GDP since 1960. One way to address the deficit is to increase income taxes. Returning to the 1960 tax rate would almost eliminate the deficit. Transfer payments like Social Security, Medicare, and other income transfer programs have increased. Trimming these would reduce the deficit. The rest of federal spending is essentially negligible outside of defense. All discretionary federal spending, including defense, has either declined or stayed the same in terms of percent of GDP. Bringing medical costs in line with other countries would help a great deal because one of our major expenses is medical costs, and we're very much higher than other countries in providing the same quality or lower quality of healthcare. The current budget deficit is a tax on the future earnings of young workers. With the population aging, transfer payments will increase. We should reduce the deficit. Tariffs are a regressive form of taxation, especially when combined with income tax cuts. See my explainer on trade. So to recap, what we get for our taxes includes roads, schools, Social Security, the military, healthcare, safe food, justice, police, and a lot more. For this, we spend a combined 13% of our national income, mostly at the state and local level. Transfers, not included in that 13% because they are not spending, support Social Security and healthcare and are not direct government spending. Social Security goes direct to people to spend, while Medicare and Medicaid transfers go to insurance companies and healthcare providers on behalf of individuals. It is these transfer payments that make up the largest portion of the federal budget. Social Security costs are determined by the number of retirees and the level of benefits. Medical costs are determined by actual need and the cost of filling that need. In the US, that cost is much higher per person than in comparable countries. So, in summary, federal, state, and local governments spend money directly on things we need, such as schools, roads, and the military. Governments also transfer money by collecting taxes and using those taxes to pay for such programs as Social Security, Medicare, and Medicaid. The federal government mostly transfers money. State and local government spending is almost double federal spending. As a share of GDP, government outlays haven't changed much. They've gone up 5%, but that's almost entirely because of transfer payments. It's entirely because of transfer payments such as Social Security and Medicare. Declining income tax receipts and increasing transfer payments have combined to substantially increase the federal deficit. So we're now paying a lot of interest on the federal deficit. We, the voters, can choose whether and how to address the deficit. Options including increasing taxes and or reducing transfer payments. So, as we've seen, the highest marginal tax rates were drastically reduced under Reagan. Reducing transfer payments would make income inequality already high and increasing worse. And we'll address why that is and how to deal with it in our next episode. Thanks for watching. In an upcoming episode, we'll suggest ways to reduce income inequality in the U.S. without hampering our capitalist market growth engine. If you missed it, background for this episode is the one on U.S. income and wealth inequality. All these talks are based on research presented in the book One World Economics, which you can find online at oneworldeconomics.com. There you can find sources for all the data presented here, as well as my background. I plan to release about one video per week to cover these topics. Please click subscribe on the next screen to get informed of new ones. If you found this video useful, here's another you might like. Click on the globe above to subscribe to learn about new videos. See oneworldeconomics.com for in-depth coverage of these topics and my background. Thanks.